joined now by Ray Andrusen. Ray should be on the line. And Ray's going to moderate our panel again. The topic this morning, access to capital and other support for your business. Ray will also be joined by Allison Standish Plimpton, one of our board members, and Richard Evans, who's with the Community Investment Corporation. And we thank KeyBank for helping us put on this panel today. Ray.
Garrett, thank you so much. And morning, everybody. It's good to have you here at the Big Connect. And this is a very important topic. We'll be talking with our two guests, and afterwards we'll be opening up questions not only in our chat room, if you're joining us Zoom or in Whova, but also afterwards we'll have a little breakout session as well. And this is a very important part of anybody, especially in 2020 with what we've been going through, trying to figure out how to keep going, how to recapitalize, how to invest in your machinery, your inventory, your employees, how to be involved with marketing your business as well. We can't think of two better people to walk us through this whole process here today. Joining us, the Senior Vice President, Business Banking Team Leader from KeyBank, Allison Standish Plimpton. Allison, good morning. Great to have you here this morning on the Big Connect.
Good morning. Thank you for having me.
Absolutely. And also Vice President for Community Investment Corporation, office is based in Hamden, one of our panelists this morning, Richard Evans. Rich, good to see you. Good morning.
Good morning, Ray. Good morning, Allison.
And well, first of all, you know, and I did change quickly, by the way, if you noticed. I put my tie on and I threw on a sweater just to be more seasonal. And since we're talking about capital and money and assets, and I want to start first with your organizations. Just tell us a little bit about, first of all, Allison, about KeyBank, the size of KeyBank, you know, accessing you. We're going to talk about how people can ask you questions later on, but tell us a little bit about KeyBank, where you're stationed, based, and the influence it has here in Connecticut.
Sure. Well, first off, I'd like to say that I'm just so thankful to be here today. I run the business banking team for KeyBank for Connecticut and Massachusetts. And we have about 54 branches in Connecticut and 8 in Massachusetts. And I've got a sales team of 8 business banking lenders that are customer facing and focused. And but I guess I would say about Key is that I think we're the 12th largest bank in the US. We have a full array of services that are commercial and institutional loan lending. We have deposit and investment bases as well. So we have a full gambit that can kind of cover most, you know, whether you're starting a business to whether you are taking a business public. So that's kind of where KeyBank is. We have, I think, 170 billion in assets. And so we are a fairly large bank.
Great. Well, we also thank KeyBank for participation here in the Big Connect this year in 2020, 2020, and the Community Investment Corporation. Rich, a little different angle. Tell us a little bit about how you're structured and what you do.
Well, good morning, Ray, and thank you and the Greater New Haven Chamber for including me as well. Great to be here today. Community Investment Corporation is a company that's been in the New Haven area for over 45 years. We specialize in SBA work, particularly the SBA 504, and we run 2 other SBA programs called the Community Advantage and the Microloan Program. We started in New Haven many years ago down near Crown Street, and we've been up in Hamden now for probably a good 20 plus years is my estimate. But it's great to be here today and look forward to answering some questions and helping people understand capital.
Great. Well, I'll ask you the first question. If we can, and Allison, you can chime in as well. I think this has not been a year that would be considered orderly. It's been disorderly on so many fronts and emotionally very challenging for a lot of people in businesses of all size. But let's talk about, in the most basic terms, as we establish our discussion this morning, the orderly process of accessing loans for business. You want to create order. How would you recommend we do that?
It starts with just a simple phone call, whether it be to Allison, myself, your local banker, and tell us what you're looking to do. It's all it really takes. And I agree with you. It has been a tough year. for people. I think Alice and I were talking last week where we both agreed that some of the deals you wouldn't necessarily have looked at a year ago are deals that you find favorable today, and vice versa. It's a tough format. I'm sure Allison will share with me that we've had some conversations that have been tough for people who've just been greatly impacted by the COVID pandemic and has affected their business greatly. But pick up the phone and give us a call. Tell us what your concerns are. Be upfront with us is the biggest key. Don't hide. Don't hide anything. Don't leave it for the end of the conversation with a, oh, by the way, kind of moment. Be upfront with us. Tell us your challenges. And I'm sure I speak on behalf of many commercial bankers. We appreciate the honesty. We appreciate the people being upfront so that we can immediately identify what the need might be and start thinking on how to help you.
Allison, that orderly process.
I would say get a package together. So both Rich and I are going to look for, if you've been in business, of course, it depends on whether you've been in business or this is a startup situation for you. If you've been in business, do the traditional 3 years of either tax returns or financial statements, a couple of years of personal tax returns, a personal financial statement, and get the package together and have that ready, have some projections ready, know your competition, really be prepared to talk about your vision and always have the conversations with us. So don't be afraid to have the conversations because believe me, in 2020, we've had some interesting conversations.
Yeah. Well, and also because we're going through this passage, which is unique in our own history with the coronavirus, there's great uncertainty. And you've had to deal with this, Allison, with people who just feel very uncertain. How do you sort of make them feel a little more certain after their initial meeting with you?
Well, bankers and Rich and whatever financial institution you're working with, we're on your side. We're in the business of supporting small businesses, right? So we don't really survive without you. And most of us as lenders actually feel very strongly that the people we're lending to, they're really courageous, right? We work for a big financial institution or we work for a company. These people have put their hopes and dreams out there, and we want to help companies realize them to the best of our extent and be able to keep that going forward. So I would say that I think most financial institutions are really going to be on your side, and you need to treat whether it's Rich or myself or someone else that you're dealing with as that trusted advisor, as Rich said, because we want to help. We don't like the alternative. So we really want to help and put you in the best position to move forward.
Rich, everybody is anxious, confident going forward. Have you had to deal with some anxiety in some of the relationships as you obviously build that relationship, it's trust?
Yeah, it's people have been greatly affected. There's no hiding that. So sometimes those conversations do have to be difficult. But let me just build off something Allison said a moment ago. As a loan officer for Community Investment Corporation, or when I was a loan officer for a bank in the area, when we talk to somebody who says, hey, I need a loan, our immediate reaction is, great, how do I make this work? Mm-hmm. And I think sometimes the perception is when somebody calls a bank or calls a lending institution, it's like, oh, they're going to try and figure out how not to lend to me today. That couldn't be further from the truth, even in this environment. Mm-hmm. Even in this environment, we want to say yes. And that's true. I have the distinct pleasure that I work with many banks across the state. And that is true with every banking partner that I work with on a near daily basis. They pick up the phone and they give me a call and say, hey, I have a deal I want to really try and make work here. So you got to understand, we are here to say yes.
Yeah. Garrett, everybody, I guess I would add also that if we don't have the answer, we're going to reach out to other partners to try to help. So it's not just, we don't like the no, we want to say, maybe this doesn't work at this moment, but we're going to try to help you and place you with someone who is better at that industry or who can do startup loans or can give you a micro loan, right? So we're there to try to help position you and your company.
What's been really heartening and actually very exciting have been ribbon cuttings. And, we all are thinking about our restaurants and the challenge that we're facing with the dine-in takeout options for some of our great restaurants. This is a foodie city, the city of New Haven. But it's been a pleasure to go to ribbon cuttings for 3 restaurants over near Ninth Square, to another ribbon cutting in Westville this year. So people are being creative, they're confident, and they're planning for the future with not just restaurants, but a whole slew of other businesses. So let's talk about those entrepreneurs and developing the business plan, the strong business plan coming out right now. What should be in that plan, and how detailed should it be? Rich, I'll start with you.
The biggest thing to connect with the banker on is how you're adapting to the current environment. It just so happens Allison and I have a deal going here where the takeout industry has done remarkably well during this environment, and that happens to be an industry that may have been an industry we may not have really warmed up to, the pizza restaurant a year or so ago. However, that particular piece of the restaurant industry and those who've been able to adapt with an outdoor seating plan, adapt their facilities to do more takeout. We're financing right now, a renovation for a restaurant to do more takeout right now. So tell us how you've adapted. Tell us how you went into this, the challenges you faced, and the adversities you've been able to come over, and how you're functioning today. Is the biggest key to understanding the next steps and gaining our interest to want to continue with that. Yes.
Alice, one banker once told me, when you put together your business plan, you want to be concise and to the point, but you can never not have enough information. Put as much information as you can, because this is an important part of the discussion.
Yeah, I would say that you're right. We want a very targeted conversation. Years ago, I've been doing this 34 years, and years ago we used to get these things that were a couple, 100 pages, and we really don't want to have that anymore. What we would like to do is have you tell us that you know the business, right? So know your target market. Are you looking for 20 to 40-year-olds? Are you looking for depending on what your industry is? Tell us what your target market is. Tell us what the sales history of the industry is, how much of that target market in your area, where you think you can pull from. You want to know who your competition is and why you're going to succeed against them. And don't just say, because I've got better customer service. Really do some soul searching. Why can you beat somebody else out of that particular business? So be very specific about those items. And that is a good business plan to bring to a bank or to a finance corporation, because I'm sure, Rich, you would like to get one of those. It's really thought out, and don't just say, I need 250,000 or I need $1 million. Tell us what you're going to use it for. Really be specific.
Yeah, to add on that, when we ask tough questions and they may be uncomfortable questions, we have to answer to an underwriter, a credit manager, a loan committee, perhaps. Different bankers have different paths to their approval, but we're asking them for a good reason. And again, we're just trying to have all the answers, so we have a lot of back and forth and make it as efficient as possible in the process.
And Ray, I guess I would say, we know you have weaknesses. We accept that. So identify your weaknesses, and maybe you could talk to them about how you're going to fix those weaknesses or how you're looking to address them. So it's okay to have weaknesses. Pretty much all of us do.
Well, someone who was starting up a business about 4 or 5 years ago had extra expenses with their children they did not anticipate. So they had a little bit more of an outflow of their cash than they had anticipated at that point in time. And they were not sure whether that affected their business credit score with their business because they had less cash, available cash on the dotted line. They had to withdraw some money and reappropriate it from the family business. So let's talk about the business credit score and what, and just like a personal credit score, what that means. And Alice, I'll start with you because you want to get strong credit score when it comes to your business application.
Yeah, I would say that the business score is obviously, how do I put this, is more relevant to the smaller business size because it's really a direct indication of how you've been conducting yourself, right? So that's very related on the smaller business size loans. So you want to look and see if you have any issues before you go and apply for credit, try to take care of them. But if you don't, or let's say in that case where there was some payments for some hospitalizations or whatever, just have an explanation ready. Bankers are not cold-hearted. We actually want to do the loan, again, going back to that. So just have a good explanation as to why this happened and get us to buy in.
So Rich, things happen, but obviously if you have a pattern of behavior, pattern of business behavior, personal behavior, you'll have a good score.
Yeah, absolutely. And people should be aware that, if you have an accounts payable list, it's possible that those payables are being contacted by a third party to produce something similar to a personal credit report. And, so just be aware of it is my advice. Accounts payable isn't necessarily accurate with regards to how you're in fact paying your bills. You might have some trade-offs going on with a vendor where you're conducting business, both sides of the equation. But just be aware of it that, if you have terms of net 15 or terms of net 30, try to abide by them. Sometimes people use credit by extending their payables. That may be doing you more harm than good.
Absolutely. Well, at this point, we want to welcome all of you who are watching this portion of our Big Connect in this panel. We welcome your comments in the chat room. We'll be getting your questions once you put some of them in, and Allison and Rich will be very happy to answer some of the questions that you have. And we have, of course, our breakout room afterwards, speakers, where you can join us and talk a little bit more one-on-one at that point. So please put your questions in the chat. If I'm putting this business plan together too, I mean, I all have doubt, self-doubt, I guess, at points in our lives, and we wonder, do you have enough good stuff on an application? So how do you know? How do you really feel confident your personal business finances are in order when you're doing this application? Rich, we'll start with you in this question.
Don't be shy. Don't be shy to brag about yourself. One of the biggest challenges I sometimes have with the handoff of my loan to a credit manager is I don't have enough details on, let's say, someone's resume. They may be owning a business now for 8 years in their, let's say, mid 40s, their 50s. They obviously did something a lot more than the 8 years that they owned the business. They did something that gave them attributes, skills to run that business. So don't be shy about, your background and your degree in what you do and how you got there and who you work for sure. The other big item that my credit team wants to know and we need to know is how you're bringing yourself to market. Okay, I'm going to start a business. How is the community going to get to know me? How they get to know my product? What is your plans to market? Is it a mailing campaign? Is it an internet campaign? Is it networking through the chamber? There's a whole host of ways to get your name out. But the more you can identify, the easier it is for us to become comfortable with your particular need.
Yeah. Very important. Allison?
I would say, I think there's a couple of sides to this question. Make sure your credit score is, in order to make sure your credit score and that you're in good shape to apply, there are so many free credit scores that you can look at and pull and try to see where your score is and make sure it's appropriate for a loan. And again, a bad credit score is not necessarily a no on a loan, because everyone is going to have some sort of hitches that they've had at their point in life. Don't worry about them. Just have the reasons for them, and we can move forward. I would say that most banks have a financial wellness review that you can go into the branches, and they will do a financial wellness review to kind of see where you're at. And they welcome that. And also, a lot of banks are doing workshops. Like we have our key at work, and there's workshops on how to improve your credit score if your credit score is not where you want it to be before you go in for an application. But I agree with Rich, just be very open and honest about what your hopes, your dreams are, what your challenges are, and be more than willing to share them.
So along those lines, I guess you can't always necessarily check your own blood pressure, but can you check your own business score? This question comes from Karen, or is there a source where you can do your own self-check? Allison, I'll send that to you.
I'm going to actually let Rich do that.
Okay.
I think our credit team does pull a business score, but Rich, I don't know. That's something that I have not done before. Obviously, the personal scores I've done, but I haven't done a business score before. It's been a few years for me. So, Rich, what is your thoughts on that?
No, there is an entity, and I'm laughing because I was trying to cheat. Off to my right is, actually it's this way. I'm actually trying to find the name of the entity that does it. So I was actually looking in some credits that I have there are existing businesses that weren't startups. So give me a minute on that, and I will come back to that answer and give you a company name in a moment that my company is, if that's fair.
That's
Perfect.
great.
Stay tuned, Karen. We've got the answer coming up. Rich is on it right now. I'm thinking about all the relationship building that you do, both of you do, in your line of work, and how the Chamber of Commerce, we're connectors. That's our job. You know, we're putting people together. We're a networking entity too, and you are as well. Somebody comes to you and maybe they have a blind spot for something they may not need, and they might require, or somebody that you would like to introduce as well. So talk about those referrals. When someone meets with you over time, as you build this trust in the relationship, you are in it to help them. It's everybody wins. We'll go in alphabetical order and start with Allison.
Okay. Again, I'm going to go back and say there's never a time I want a prospect or somebody who's come into the bank, taken the time to give me a call, or give the bank a call, or give any bank a call, and walk away without an opportunity to know and have a direction. So it could be that I pick up the phone and work with Rich. It could be that I pick up the phone and talk to Jim Bizdera at the Community Economic Development Fund. There's the Green Bank, there's the DECD. There's so many, there's SCORE. There's so many places that we can help you develop a rapport and put you in the right position. And so I think that, yeah, we want to, I think we have 4 or 5 loans right now with my own team going on with Rich's team. And so it's a real community to get our economy going and get it going in the right direction, because we want, we love the state we live in, and we want us all to prosper. So we constantly are reaching out to each other, because it is a small community of lenders, and we've probably all worked together at some point in time. So I would say that we'll help you. We'll help you get where you need to go.
Those referrals are important, Rich.
Absolutely. I happen to rely heavily on banks for referrals. I'm a former banker. I was in the banking community for approximately 25 years, working for Bank of America, and then 2 community banks in the New Haven area, the former Quinnipiac Bank and Trust and the former Start Bank. Start Bank is now New Haven Bank, of course. But community banking is fantastic, and knowing your banker is key. So as I said earlier in this, banks are my clients, and going to things like the Chamber events when we have them in person again, and in the big ballroom there in the Omni, Those are wonderful moments for me. Trust me, I prioritize that day to make sure I'm there in those ballrooms or the lawn club, et cetera, for sure. I do have an answer on that question, by the way, if that we table the moment. And the answer was very obvious, and I'm embarrassed I didn't know it off the top of my head. Experian happens to be the company we use, which is also a company that pulls personal credit reports. So that's just one. There's others, but Experian is a company that we use.
Great. Well, I'm glad you got the answer, Karen. I hope that answers your question from before. We're going to talk a little bit in just a moment about some of the products, the lending products. We'll get into sort of the nitty gritty if we can about that. But just one last word about sort of your legal obligations, the trust transparency resources application here too. Personal anecdote, my barber is 81 years old, and he cut my hair when I was a little boy as well. And I don't know if I'm a great walking advertisement for my barber. I'll leave that to everybody else to judge. But I was asked, I'm going to go to somebody once a month who's going to cut my hair and has a very sharp instrument in his hand. I really want to trust and know that person very well. So given that, they want to know and trust you very well. So you have to be transparent. You have to engender this trust. You have to give people documents that they sign, legal documents, really, when you do this. So talk about your obligation to be transparent. And Allison, I'll start with you on that question.
Well, first off, I think that everybody should know that your financial information is protected. It's proprietary. We cannot share this with other people. I could not share it with Rich unless I'm given the customer's permission to share it. I cannot share it with certain other people in the bank. Even it's on a need to know basis, and it has to be directly impacting that credit facility. So, I'm not allowed to just put that out there and have it on a drive and everyone in the bank has access to it. That is not the way it is. Every bank's drives and commercial lending drives are proprietary to the lenders and to the people who have to touch that loan only. So, I remember years ago when I first came into the bank, and, I lived in the same town as one of my customers right now. And he's like, I don't know if I want to, have you as my banker because you live in my town and we may know the same people. And it's so funny because I looked at him, I said, I'm not legally allowed to discuss your personal information with anyone. So please know that, again, it's a very, very protected, it's like your social security right now, even with your social security number. If I tried to send Rich anything with anyone's social security number, the bank would come up and be blocking me. So everything is really protected. And we try to put up as many firewalls as possible. But again, you have to develop that, and you have to look at us. And as a team, there should be your attorney, there should be your accountant, there should be your banker. And that is kind of like your board of trustees. And move forward with that in mind, that we're all on that team. We're on the team together. Rich, what do you think?
Yeah, I think you nailed it on the head when it comes to confidentiality. Just to give more people a little assurance on that, is that banks are audited for their security. It's not just a matter of auditing a bank to see if they accounted the cash flow correctly and the collateral correctly. Separate auditors come in and actually audit your security and make sure that not only is the bank and its employees using it properly, is all a part of that audit. So just a little add to that. I've gone through many tests during my banking years, as I'm sure Allison does annually, to make sure that we're not, unintentionally, sharing people's information. Again, everything's confidential. So is there something, I think there was another part of that question I missed. I apologize.
Yeah, well, especially you answered the major part of the question about the transparency and the legality of it, but to even pick up beyond that, internal cybersecurity. I mean, this is hugely important for your line of work, is to have an incredible firewall and to make sure that Allison, as you mentioned, with Social Security numbers, very sensitive information, that you both have a very strong cybersecurity team. And I'm sure, Rich, it applies to your work, and Allison to yours as well.
And listen, Allison and I have been around the block a few times. She's a senior manager at a major bank. I've been, my company 4 years. I've been in the area for 28 years. CIC wasn't going to hire me if I've been known as to go, blab about my deal with XYZ company, in an elevator. You just don't know who knows somebody, and we don't get to where we are in our careers, as most bankers do, with having a big mouth, or a mouth that talks a lot about other companies.
Very key and important. So let's talk, if we can, we've identified trust and sort of the whole process of preparation, but the actual lending products, which are not right for everybody. Different financial institutions have different products. So Allison, let's think in terms of this. If you can walk us through the smallest of businesses, mid-size, largest, you've got to think what matches in every case.
Right. I would say that, you have your lines of credit, which could be a year, or you can have on-demand lines of credit, which could go on in perpetuity. You have your term loans, you have your mortgages, you have your equipment loans. And most of the time, bankers want to properly match the useful life of whatever the product is to the, if it's an equipment loan, you're probably going to go 5 to 7 years, because that's what we deem as useful life. Now, there are other vehicles that government enhanced term loans called 7As that Rich I'll let you handle most of that, but that can further the term. So obviously, the longer the term, the longer it takes you to pay it back. But if your cash flow is tight or you're growing, that will help you. But so there can be a variety of terms of depending on the product that we're using to finance. So.
Yeah, it's a matter of as Allison, matching the loan request with the tool that we have in our box. So, we get equipment requests, and we certainly get real estate requests. Well, real estate has a pretty long shelf life. We amortize in the commercial side 20 or 25 years on a real estate loan. And sometimes it's technically in the guidelines, but whether it's right or not for the customer is a conversation that we have with our borrowers. You might have a piece of equipment that has a lifespan of 7 or 10 years, and the bank says, or SBA says, oh, hey, you could actually put that into the 25-year loan and make it just one loan. And gee, isn't that the greatest thing since Swiss cheese? Well, is it? If you're still paying on a piece of equipment in the 15th year of your SBA loan, and you had to kick it out to the curb in its 7th year or 10th year, that's not good for the customer. That's not good for the borrower. They're paying on something that has no longer a useful life. So it could be that you come out of a loan meeting or a meeting with your banker, and they've proposed 3 different loans: a line of credit for your short-term working capital needs, things to just fund your working capital cycle of when you build the product to the time you get paid. That might be a 30, 60, 90 day, or maybe even more cycle. So, okay, great. You get yourself a line of credit. You might have some equipment needs. So maybe there's a 5, 7, 10-year term loan in that, and you're buying real estate, and you come out with the 3rd loan on the real estate. But the most proper thing to do is make sure we're lining up a structure with the asset that you're looking to finance, so that you're not continually in debt. And that's an issue that comes up. Actually, I mentioned audits earlier. An auditor from the state regulatory agency or the federal agency could say, why are you financing a 7-year piece of equipment on a 10-year loan or a 20-year loan? So again, it's all conversation. It's all about having two-way dialogue and working with a seasoned banker that knows, how to structure those loans properly, and not be afraid to say, hey, I think you need 3 different loans here, and here's why.
I would agree.
On the other end of the spectrum. And Allison, I'm sorry.
No, I was just going to say how much I agree with that, because at some point you don't want to have too much debt because we do look at these debt to equity ratios. And so you don't want to be carrying all this debt, because at some point, if you have too much debt, then you're not really bankable anymore. So there is that interplay there. So that's why you need the trusted advisor and the banker in your corner, helping you look at where you want to grow and how, if you want to grow, what's going to get you there, and making sure that the debt ratios are in sync with where you want to be.
And that's a real conversation that happens, Ray. I'll give you an example. It took place to me about 1.5 years, 2 years ago. I financed a well-known golf course in the area, 25-year loan, great. And what came with the purchase was a bunch of golf carts that were used. And I was told, well, why are you doing it that way? Just do the easy thing and throw it into the 25-year loan. Again, it just wouldn't have been the right thing for the borrower. And they would have been paying for used golf carts for 25 years that probably had another 3 to 5 years of lifespan on them.
That doesn't work too well. You can get around maybe in the backyard with that, but maybe not in 18 holes. Let's reverse this. We have a great question from Cecil, and it's not about what we need, but about when you don't need a loan. If you can follow the question from Cecil, he asks, is it better to get a line of credit or get a loan when you do not need it?
This is an age-old question and a problem. And we've all heard the line of, oh, sure, now that I need a loan, you won't give it to me. When I didn't need it, you're knocking on my door every other day. So, it's a tough question. It's probably better banker question, but I won't back down from it just because I'll be the bad guy here. But, the truth is, I think every business should have a line of credit that qualifies for a line of credit. You just don't know when that particular need is going to come down the pike, that business opportunity shows up on your front door, and all of a sudden you need to produce 50% more widgets than you were producing before, and you don't have the equipment, you don't have the capability. We talked about matching credit requests up with the credit facility. I don't think, and Allison, jump on me if I'm wrong in this. There's nothing wrong with talking to your banker, say, listen, I need this piece of equipment in my shop tomorrow. You obviously can't turn around my loan request by tomorrow. It might take a little longer. Can I use my line of credit to buy that piece of equipment, and we'll replace it with the proper term loan within the next 30, 60, 90 days, or whatever the case might be. But you never know when that opportunity shows up on your doorstep and all of a sudden you need extra capital. I believe COVID was a perfect example of people all of a sudden need an extra capital that all of a sudden scrambled for lines of credit, and now they have banks going, hey, we're a little nervous about the COVID, whereas those who had the line of credit might be breathing a little bit easier today.
Right. I would say I 100% agree with you on the line of credit. Have a line of credit, yes. And before you go buy the piece of equipment, by the way, let's just have that conversation with your banker, because if you just want to make sure, okay, everybody's on board, we're going to start the term right now, but go ahead and buy the piece of equipment on there. We'll start the loan process. I will say that I probably would not say to go out and get a term loan, because most of us, are going to say, what are you going to use it for? Oh, just to sit in your checking account? That's really not something that we want to lend money for. Again, it's going back to the targeted usages. So, we're not going to give you a term loan for working capital just to sit in your checking account. If we have, okay, well, you're going to be going out and increasing your sales, and therefore you need to have more permanent working capital to increase, to hire more people. And we know that's going to become a permanent portion of your working capital, and we'd eventually term that out on your line anyway. Then I can have that conversation about having a term loan. But just to take cash and put it in your pocket, really not where I'd like to see you go. But the line of credit is a good idea.
Great answers. Great. Well, we have about 10, 12 more minutes in our conversation here. And at the back end, I'd love to talk success stories. I'm sure you have many, and things that you're very proud of over the course of your career, where you've seen businesses flourish because you were the wind beneath their wings in that respect. But let's talk about what people don't realize sometimes, Allison and Rich, and that is their assets. They have more than they think. They actually, in terms of collateral, they have more than they probably think they can borrow against. And Allison, I'm sure you've seen that many times too.
Yeah, I think that some people don't understand what we as bankers consider assets. So um, typically right now, years ago, I used to take a lien on your accounts receivable and your inventory for your line of credit, and then on your fixed, your machinery for your equipment loans. But now we take really just all business asset liens filings on everything. So you have AR, you have inventory, you have your uh, equipment that, and normally we look at net of depreciation as the valuation on that. You have your building, and those are just your those are just the business assets. If you're starting out, you may have personal assets, a personal house, and depending on where you stand from your collateral perspective, you may, if you're over 20%, we're going to make you guarantee a loan. So bankers do that. If we honestly believe that if you don't believe in yourself, then why should we? So you're going to have to guarantee the loan. And if you're short on collateral, we want to secure that with either if you have some marketables that you could pledge, or some or a residence that you could pledge. But there are other assets that we haven't discussed, which is depending on your industry. Let's say you're in the oil industry, your customer list is considered an asset. So there are things that we can do that are a little bit different, tailored to your specific industry. Rich?
I think you nailed it pretty well on the head. I'm not sure I'm going to add much more to, the collateral. I just say this is that as your business matures, your collateral options will be more favorable from your bank in all likelihood. As the greatest thing for a bank, or the easiest way for a bank to evaluate you, is from your historical cash flow. And as you prove yourself, that all business asset lien is the more likely lien for your loan versus, hey, I got an idea. You've convinced the bank, you've convinced our company, you've convinced SBA that it's a viable deal that we're willing to move forward with you on. Excuse me. You may have to put your house up on those particular situations. You may have to put other collateral up. So, but it's a maturity thing with your business. As it grows, those terms typically become more favorable.
And you shouldn't be afraid to apply for a loan if you don't have 100% collateral, right? So that's where the SBA wants to come in and help you. And so do we do non-fully collateralized loans with the government enhancement and working with Rich? Absolutely, we're going to. So, the federal government wants us to have successful entrepreneurs in our country, and they're going to stand behind it.
Absolutely. Well, let's talk a little bit too now about, and we'll wrap up with some examples, some great stories that you're able to tell, a little bit over the course of what you've seen. But strategic planning, just kind of having a vision, not just about what we're going through now, but 5 years, 10 years, 20 years out. For example, I'll just break it down into a home loan, not business loan. If you're going to move in 1 year, don't refinance. Not a smart move. Wait 5, if you're going to be in your home 5 years, 7 years. Have a sense of direction and a personal plan based on a timeline. So if you can both tell us a little bit about encouraging your applicants to have that kind of part of their strategic plan with a timeline where they can see their business grow and they can see what they need 2, 5, 10 years out. So I don't know who wants to take that question, but jump ball, go for it. Rich, I'll start with you. And
yeah, that's a normal conversation that should be taking place between the banker and their client on at least an annual basis. And there's certainly reasons that Allison could expand on why you're talking to your customer about these things 4 times a year at minimum. If you're a large company and here 25 million in sales, you better have a personal relationship with your banker. But yeah, no, these are good things. And if something I used to say when I would visit a customer, when I had a portfolio, I would say, listen, what do you see coming down the pike the next 3-6 months? Do you have capital expenditures? Do you have equipment needs coming up in this next year? And if so, how are you paying for it? You know, is that something I need to be prepared for? Were you planning on buying it? I'm sorry, were you planning on financing it through your bank, or is that something you're going to pay for cash? And if you're going to pay for cash, does that create other issues in your cash flow cycle? So those are conversations that should be happening with a banker at least once a year, if not more.
Check in.
Absolutely. I would agree with that. And again, it depends. The business plan is going to change on where the stage you are. So if you're a startup, you may have, a 3 or 4 year business plan, but things can always come up. I mean, we've just been through COVID. So who would have said that a restaurant or a gym would have had to buy, IT equipment to go on and do Zoom calls or Zoom exercise. So you never know what's going to come up, and you have to be fluid with that. But of course, as a banker, we want to sit down and have conversations with our customers. Half of our customers now, because of COVID, are looking for fraud protection. They're going much more online. So remote deposit capture, not wanting to go into the banks, merchant services, because they're taking merchant, they're buying things on cards. Everything is changing. And so they may need to buy a new piece of equipment for this change. And it's evolving. But that's part of the teamwork, and that's what we do.
Yeah, great. Well, we're going to send it back over to Garrett Sheen in about 5 minutes, 5-6 minutes from now. But I want to wrap up if we can in this conversation. First of all, to encourage anyone who has another question, or there will be a little panel afterwards that'll be taken off to one of our chat rooms. You can join us too, our speakers panel here today. Rich and Allison will be very happy to answer your questions one-on-one. But in your storied and very long active careers in banking and lending, Allison, I'll start this question with you. Just the joy of being there as a banker, to be able to provide business recapitalization at a moment when it was maybe challenging, or they needed to expand and they became a huge success, or a startup business that maybe started out maybe modestly and grew to be a great business as well. Talk about some of the joys in your business.
Seeing someone's success that they may not have had without you is like a proud parent. I guess that's the good way to say it. I came up with 2 examples for today's conversation, and one was one that we were working directly with Rich on, but another one is also working with Rich's team on, and it's a company that I have banked this company for the better part of 20 years. And he would just buy different businesses. And one of the businesses he bought, he's in the middle of selling to somebody who has worked for him and managed it. It's an auto store, and he's managed it for 14 years. So I think right out of high school, the guy came in and he started managing the auto and truck repair place, and he's going to finally buy it. Right. So we're going to be financing the purchase of the building, the acquisition of the business. We're going to be getting him key at work. So we're going to help his employees, be able to cover, plan for whatever they need to plan. We're doing DDAs, which are checking accounts. When I began in banking, I didn't know what that was. We're going to do merchant. We're going to do credit cards. And it's all blossoming and making this guy's dream come true that he's had since he was in high school. And he's now going to own his own business. How great is that? It's a fantastic story.
Yeah, that is. It is a great story, great satisfaction. And Rich, over time too, you've had those kinds of stories. Tell us about some of yours.
It's unfortunately we have this confidentiality thing that we talked about earlier, but we just love to sit here and tell you that, wow, I did the loan for XYZ company, and you all know it, and look how they're doing today and when they started. So for sure, those things are out there. The company that you worked with when you first started your commercial career, and you still see them out there today, those are the ones that agree with. You're so proud to still visit them. You're proud to go patronize them and bring your business home. It's great. But I have, two from last year that I could think of. Young couple just starting out, just had a great first year with buying a marina, of all things, up on the eastern side of the state. And they've just put their heart and soul into the business. And they took it over from it was a very well aged marina, and it just needed some fresh blood. And it's exciting to drive into that marina today and see where it is now than where it was before. I think Allison said it best. I mean, we put people's dreams into motion and help finance them, and they carry their passion through into their new business. It's great to see that.
Excellent. It's been a great conversation, and a lot of questions have been answered here about pursuing dreams and expanding business, and all of your help in that regard. So as we go forward, people will need to talk with you as we go into our own little speakers room. But Rich, they can get a hold of you how? It's the best way.
Community Investment Corporation in Hamden. We're right near Whitney and Dixwell, 203-415-2811. Or just go to our website, you'll find me.
Excellent. We'll know where to track you down. Allison, how about you?
I sit in both New Haven and in Manchester, and my phone number is 860-682-2448, and I'd welcome any calls.
Great. Richard Evans, Vice President, Community Investment Corporation. Thank you. Allison Standish-Plimpton, Senior Vice President, Business Banking Team Leader for KeyBank. Again, thanks for being here. Garrett, we had a great conversation. I think we learned a lot in the last hour.
Great, thanks so much. And thank you to Rich and Allison. So much of what we try to do at the Big Connect, even when it's virtual, is support our small businesses. We know so many of them need help right now. So just kind of demystifying the capital process, letting people know how easy it is to be able to get money for their business, and some strategies right now for how to deal with these difficult times. That's extremely helpful. So Ray, thank you again, and thank you to the panel. We continue on with the 2020 Big Connect virtual presented by Comcast Business. We have more speakers today. We're going to be hearing from Lori Santos in just a few moments, but we want to let you know about the Zoom room. And I believe our panelists are going to be heading over there. So what you can do, and Shantae is going to put into the chat the link to go over to our networking room presented by Southern Connecticut Gas and UI, the energy efficiency programs there. Go over to the Zoom networking room. That's an opportunity to talk with our speakers a little bit more. If you just heard them, if you want to have a chance to meet with them, it's going to be in a meeting format. Also, we're using that location as a great place for people to connect and get together. We have dedicated networking times, but it's open all day. So the Zoom Lounge networking room at the Big Connect open all day. And as I said, we have a lot more speakers to go. We're going to play a couple videos here. Also a video that we rolled at our annual meeting back just a few weeks ago, talking about the optimism that we have for our business community, our expectations and our hope that we can turn things around, and the hope that our businesses have. So let's play a few of the videos, and then we'll get into Lori in just a couple of moments.
The business community has faced the pandemic by pivoting, innovating, responding to changing customer demands, protecting the health of customers and employees, making difficult decisions, and ultimately persevering through historic conditions. Here are a few exciting words from our businesses that have pivoted and demonstrated perseverance in the light of this pandemic.
We're here to talk about our commitment to making sure Guilford businesses survive the pandemic. There have been some challenging times, but our community has stepped up. We had one merchant who allowed several of the other merchants to sell wares in their store. Great example of collaboration. We look forward to coming out of the other side of this pandemic stronger and better than ever. It's always a great day to be in Guilford.
See, never before have we had this level of collaboration amongst providers. Hospital systems, post-acute care groups, physician groups, and managed care companies all working together to redefine healthcare and create a healthier tomorrow for those we serve.
we're actively growing our business in the state of Connecticut. We create business applications related to robotic process automation, virtual and augmented reality. We're optimistic about our business and proud to be part of the innovative community of New Haven.
And I'm optimistic about New Haven because if you look down there, we're seeing a beautiful Black Lives Matter sign, and I love seeing social change in the right direction.
The surprising COVID upsides were our ability to connect to more people than ever before due to all of our support groups and educational programs being online and virtual. Our 7 walks being remote and virtual resulted in increased community engagement and also local awareness.
The reason I'm optimistic about our business is because even during these troubling times, our business has been able to grow. And once we get past these times, I'm even more encouraged by our future growth potential.
I'm at the Canal Dock Boathouse, where this weekend the musicians of the New Haven Symphony will be performing our first concert since March. It's an unlikely location for a classical music performance, but it's an example of the kind of ingenuity and resourcefulness that make the city of New Haven so great.
I just want to say how heartened we are by the greater New Haven community for all their support during the pandemic, from their well wishes to our staff and our patients to the donations of masks and food and money. We just really saw how the community always rises to the occasion during the worst of times, and you all helped us think possible.
We have a lot of reasons to believe that 2021 is going to be a great year. Throughout all the challenges of the pandemic, real estate and housing has been doing really well. We've got the best area, the best arts and culture, best restaurants, and the best housing.
Am I optimistic about Albertus's future and New Haven's future? You bet I am. For 95 years, Albertus has been overcoming challenges and obstacles, adapting to bring its education opportunities to those who might not otherwise have them. That story is New Haven's story. I've seen New Haven rise above challenge and move forward in my tenure in this community. So absolutely, New Haven will thrive, Albertus will thrive. As a community, we're going to thrive.
I agree with them.
At Marrakesh, we embrace human potential. The quick response of our New Haven community, government, and business leaders in providing resources to ensure that our most vulnerable citizens were well taken care of and had the supplies that they need, and that our frontline workers were recognized was truly overwhelming.
And we always love playing that video because there is a lot of challenge facing all of our businesses, folks individually as well. That goes without saying, but a lot of optimism too. And so many of our businesses, as you heard in maybe one of our previous panels about positive pivots, a lot of businesses have made changes that have made them a better business, maybe not right at the moment, but when we come out of this pandemic, they're going to be in a stronger position.